don't think they're overly concerned right now. I think one of the major pillars of Abenomics right from the get-go was to kind of bootstrap the Japanese economy via the, the monetary easing from the Bank of Japan. It does certainly, it enables them, essentially gives them a little bit of time in order to work on the third arrow reforms. Because you get translation gains from the exporters, the earnings increase, and I guess the bet was that this would raise wages. I guess the problem has been that wages haven't risen quite as quickly as they thought they would, primarily due to the kind of cautious deflationary mindset of Japan Inc. generally, I think.
Yeah, it's all about wage growth, isn't it? To try and boost that virtuous cycle, then do we need to see a corporate tax cut if this narrative now is very much about fiscal easing?
I think there's definitely a conversation ongoing, certainly between the Keidan and Ren. I mean, recently, just last night, today, we've heard noises that they'll also be asking, for, or certainly encouraging, shall we say, their membership to raise wages in the next spring round coming up in 2015. And I think also you've got a very, very tight labour market in Japan. We're now into the threes on the unemployment rate, and I think that's going to give a little bit of a tailwind for wage increases going forward. I think this has always been the missing link. It's wages, 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 which really need to come through, and then we get the Japanese domestic consumption story then begins to fire. We've said, I think, all year that the consumption tax hike back in April was probably premature, and the GDP numbers that were released recently have kind of shown us that that was probably a mistake. So pushing out the consumption tax hike, or the second leg, as it were, from 8 to 10, I think is absolutely the right call.
Short term, Mark, are we going to see more two-way volatility, not only in the dollar-yen cross, but also in the stock markets as well, as we get closer to that mid-December election in Japan?
Well, I think there's uncertainty from the election. There's no doubt about that. It's very Koizumi-esque from Abe in many ways. But I think the chances of the LDP and New Komeito, the coalition, actually losing this election are quite low. I think you will see volatility. Short term, it will be choppy. I think if you're investing or looking to invest in the Japanese markets, buy that weakness when you see it, because I think, at 118, we could, as you mentioned earlier, go to 120. We could even see 125 in pretty short order. That gives Japan Inc., which is lean and mean in any case, a real competitive edge against classic competitors. For example, the Korean complex, also the German export machine as well. So I think Japan Inc. is a good buy here.
And very quickly, Mark, 18,000 Nikkei by the end of the year, if not sooner?
I think a distinct possibility. I would certainly be definitely in that camp.